All right, this morning, there is some relief for customers after the historic collapse of Silicon Valley Bank.
Yeah, after shutting down one of the tech industry's top banks on Friday, federal authorities say they will fully protect money deposited at SVB, and customers will have access to all their money beginning today. But yesterday on CBS's Face the Nation, Treasury Secretary Janet Yellen made it very clear the federal government is solely focused on helping depositors get their money, and she said the government will not bail out SVB.
During the financial crisis, there were investors and owners of systemic large banks that were bailed out, and we're certainly not looking, and the reforms that have been put in place means that we're not going to do that again.
Many tech companies abroad are also breathing a sigh of relief. This after the largest bank in Europe, HSBC, announced it is rescuing the UK subsidiary of Silicon Valley Bank after all-night talks. For more on all this, we are joined by NBC News senior congressional reporter Scott Wong and Investopedia editor-in-chief Caleb Silver to help us break it all down. Thank you both. Scott, let's start with you. In a tweet last night, President Biden said he was firmly committed to holding those responsible for this mess fully accountable. We know senators received a briefing from the Biden administration on SVB last night. What can you tell us about all this?
Well, obviously, this has been a big topic all week, and it's going to be a big topic on Capitol Hill all week. We will hear directly from the president later this morning, who will address the issue and the actions that his administration is taking to try to stem some of the concern about the markets and in the banking system in general. What we know is that last night, Treasury and Federal Reserve officials from the administration briefed all House and Senate lawmakers. There were some that were left off the call due to the hastily arranged phone call. But we also heard those officials brief reporters as well. And what we heard is pretty much what you laid out and what the Treasury Secretary laid out, that folks who put their money in these banks, both Silicon Valley Bank and Signature Bank of New York, will be made whole. They will be able to access all of the funds, even beyond the $250,000 federally insured limit, as soon as today. The Treasury officials also really emphasized that taxpayers will not be on the hook. This money is coming from an insurance pool that banks pay into periodically. And so this money is not coming from out of taxpayers' pockets. And that is something that this administration really will be emphasizing throughout this week as Republicans attack this plan of action as a bailout. It is, in fact, not a bailout as we have seen in past economic crises. So that is certainly very important. We'll hear from the president later this morning.
And Caleb, let's talk about the what and how. SVB is not a small bank, right? It's the 16th largest bank in the United States. How did it fail, and what does it mean, big picture, for the rest of the economy?
Well, big picture for the economy, I wouldn't worry too much unless we have several more of these failures, so to speak. But why did it happen? A lot of these banks, what do they have to do with the money they're holding, the deposits? In the case of SVB, that was $172 billion. They have to invest in it, and they were invested in government securities. But you guys know the impact of rising interest rates is not just something we feel through inflation. You feel it if you're holding those assets as a bank. So the value of the assets they were holding were dropping in value because of what happened last year. So rising interest rates have this big impact, and it hurt the balance sheet of this bank. When depositors came for their money, they just didn't have it, and that's how this happened. We have to see what other banks are holding, but you can't ignore the fact that rising rates have had a big impact here.
So this is the second biggest bank failure in U.S. history. It's the biggest we've seen since the financial crisis back in 2008, and people are watching this and saying, okay, is this going to be a similar scenario? Are we going to see this spread? Is this different? And if so, how?
Yeah, it's different because back in 2007, 2008, banks were holding on to mortgages that were undervalued as well. There was systemic risk across the banking industry, not just here in the U.S., but across the world. Right now, we're talking about some big banks, but not as big as the biggest banks in the world that hold trillions of dollars in assets. The economy is going to be okay. The banking system is going to be okay. But you have to listen closely when you hear Treasury Secretary saying things like systemic risk, and we're trying to prevent a bank failure here. That's important to listen to. We got to watch what happens next.
We'll be keeping an eye on it. We know you will, too. Thank you so much, Caleb Silver and Scott Wong. We appreciate your time.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.